In 2020, a respected German company collapsed in a single week. Its CEO was arrested, its top executive vanished, and 1.9 billion euros disappeared without a trace. Wirecard was supposed to be Germany's answer to PayPal, a symbol of innovation, a national success story. Instead, it became one of the biggest financial frauds in European history. But this is not just a story about money. This is a story about power, silence, and a lie that fooled an entire country. Wirecard began in 1999 as a small payment processor for online businesses. At first, it handled transactions for gambling and adult websites companies traditional banks refused to touch. Then Wirecard changed its image. It became sleek, modern, respected. By the 2010s, investors believed Wirecard was a tech giant in the making. Its CEO, Markus Braun, dressed in black turtlenecks and spoke like a visionary. He promised huge profits from Asia and the Middle East. In 2018, Wirecard joined Germany's elite stock market index, standing beside companies like BMW and Siemens. Its value reached more than 24 billion euros. Germany had found its Silicon Valley hero, but inside the company, the numbers did not add up. Some analysts noticed strange patterns. Most of Wirecard's profits came from mysterious third-party partners overseas. Companies no one could verify, accounts no one could inspect. In 2015, a Financial Times journalist named Dan McCrum began investigating. What he found shocked him: fake contracts, invented customers, and financial statements that did not match reality. When he published his findings, Wirecard did not defend itself with facts. It attacked. They accused him of market manipulation. They hired private investigators to follow journalists. They pressured regulators to silence critics. German authorities took Wirecard's side. The journalists became suspects. The company became untouchable. In 2019, regulators even banned investors from betting against Wirecard stock, an extraordinary move. The message was clear: Wirecard was protected. Behind closed doors, Wirecard claimed it held billions of euros in Philippine bank accounts. These funds supposedly belonged to customers. Auditors asked for proof. Wirecard provided documents, stamped, signed, official. But they were all fake. The profits were invented. The customers were imaginary. The money never existed. Yet the illusion continued. Banks gave loans. Investors bought shares. Politicians praised the company. Wirecard became too big to question. Then, in June 2020, the lie collapsed. Auditors refused to approve the company's accounts. They could not confirm the existence of 1.9 billion euros. Wirecard contacted Philippine banks for proof. The banks replied with a single devastating statement: those accounts never existed. Within days, Wirecard's stock lost more than 90% of its value. Employees arrived at work to find the doors locked. The company filed for bankruptcy. Markus Braun was arrested, but one man was missing: the COO, Jan Marsalek. He boarded a private jet and disappeared. To this day, he has never been found, and the question became, who really controlled the biggest lie in Germany? When Wirecard collapsed, Germany woke up in shock. A company once praised as a symbol of innovation was now accused of being a criminal organization. Investigators searched offices, computers were seized, employees were questioned, but one man could not be found: Jan Marsalek, Wirecard's chief operating officer. He vanished within hours of the collapse. Some reports say he escaped through Austria. Others claim he flew east. Today, he remains one of Europe's most wanted fugitives. Prosecutors discovered that Wirecard had been faking profits for years. Fake revenue, fake bank statements, fake customers. The system worked because no one wanted to challenge success. Auditors failed, regulators failed, politicians failed, journalists who warned the public were attacked instead of protected. More than 40,000 investors lost their money. Pension funds collapsed. Charities were destroyed. Lives were changed forever. Markus Braun, the CEO, went on trial. Prosecutors accused him of fraud, market manipulation, and running a criminal organization. They said Wirecard was never a real tech company. It was a financial illusion. Braun denied everything. He claimed he had been betrayed by subordinates. The trial exposed a system built on silence and fear. As the courtroom drama continued, the mystery of Jan Marsalek grew deeper. Reports linked him to intelligence agencies. Others claimed he lived under protection in Russia. No one knows where he is, and the missing 1.9 billion euros has never been recovered. The Wirecard scandal forced Germany to rewrite its financial laws. New oversight rules were created. Auditors faced stricter controls, but the damage could not be undone. Wirecard proved something terrifying. A company can look perfect, be praised by leaders, be trusted by banks, and still be completely fake. This was not just a crime of money, it was a crime of trust. Wirecard is now a warning to the world, a reminder that power can silence truth, and that even the strongest systems can be fooled. Somewhere, a man is still hiding, and billions remain missing. So the story is not over. It is still unfolding. Follow for more money crime.